Well, AI hype is dominating the markets. Shares of SoftBank and Nvidia popping today on news that they are collaborating on a generative AI platform. And our next guest says this could be the next big play in AI. We have Atul Goyal, who is the Jefferies managing director here. Walk us through the thesis here, why this is the next perhaps big push that we're set to see, especially from a company in Nvidia that has absolutely been making headlines and continuing to hold on to mind share, both among some of their corporate partners, but in the market as a whole within this broader thrust towards AI.
Thanks for having me, Brad. I want to make a distinction here very clearly that it's two different companies, SoftBank Corp, which actually announced a partnership with Nvidia, and SoftBank Group. So SoftBank Corp did not rise yesterday. SoftBank Group went up 8%. The partnership is actually between SoftBank Corp and Nvidia. On the other hand, a few years back, Nvidia was trying to acquire Arm, if you remember. That was from SoftBank, and they gave up the deal. That angle is still somewhat valid. Now, SoftBank Group is trying to get Arm listed later this year. And while most of their product and sales are towards mobile phone devices, a certain part is for data centers where they compete with Intel. And that's the part they are likely to highlight and dress up as an AI play for data centers. So essentially, it's a dress up. Heading into the listing, we expect SoftBank stock to do well. But going up too fast, too soon is something that we are a little worried right now. The IPO is still several months away.
And so do you buy their dressing up of ARM as this AI play? And I mean, I know, you're not covering yet the IPO because the company hasn't come public yet. But is that something investors should be looking at?
So, Julie, thanks for that. There are some companies that we believe are investments. So you invest, you build a position, you might trade in and out a little bit, small positions, but you invest. And then there are other stocks which you trade actively. SoftBank Group, in our view, is more of a trading stock, which you trade in and out. There are opportunities it gives you to short, and there are opportunities it gives you to go long at times. Currently, it's trading very close to our fair price. In late November, when it went to 7,000, it was too far high. We downgraded to sell. And once it closed to our target price, we upgraded to hold. Now, we are waiting for the stock to catch the AI hype into the ARM. And there we expect the stock to rally significantly. For every $10 billion of ARM valuation increase, SoftBank stock could rally about 15%. So we value that at around $40 billion currently. But if in a hype, ARM gets revalued much higher, it will give an opportunity at that time to trade SoftBank at a higher level. However, history suggests, and this has been twice the case, SoftBank was the biggest owner of Alibaba in 2013. It was 2014, sorry. When it got listed, that was the day SoftBank stock peaked. And for many months and many years after that, it did not touch that same stock price. Same thing happened with Uber. So the risk is going into the ARM IPO, the stock rallies a lot, but after that, it collapses. So that is what we are mindful of going into that hype. Does that make sense?
Yeah, certainly. And so as we think about some of the biggest beneficiaries that have at least seen their own stock move as a result of the AI hype, if that hype starts to settle and we start to see revenue be prioritized among investors, as we should, and that reattachment to the fundamentals of the business as well, in tandem with some of the demand that they are seeing or at least forecasting, are there three big names that you expect to outperform, given that we've heard that chip companies are kind of that foundation of the broader totem pole, if you will, for AI?
So globally, our firm's view, Jefferies' view, is essentially that on the back of this investment, you're likely to see semi-cap equipment manufacturers like AMAT, like Lam Research, Tokyo Electron, ASML benefit. Because besides the chase for AI-driven, the AI hype, you also have a massive amount of support that the governments in US and Japan and Europe are giving to these chip manufacturers to establish capacity outside of China and outside of Taiwan. And as they do that, all that money is going to go into building up equipment capacity. So the likelihood is that these companies, other companies like AMAT, ASML, Lam Research, and Tokyo Electron could also benefit immensely as the cycle begins from here onwards. So they're already off their lows, but going next 3 to 5 years, these companies could also benefit immensely.
Atul, I wanted to ask you sort of a broader question, because we have seen such an incredible climb in the Japanese market more broadly. That hasn't been true necessarily of these large cap Japanese tech stocks that you cover. In the case of SoftBank, for example, it hasn't done the same thing as the market. But I'm just curious how you're thinking about that with all the enthusiasm that there has been as of late in Japanese markets.
I'm really glad, Julie, you touched upon that one. It's something very unique that is happening in Japan. And it's not just about Japan creating a new high after 30 years. That's a side story. The real story is something else. And I, for long, while I've covered Japan stocks almost 20 years, I've been a Japan skeptic. I believe there are few good companies, great companies, and you invest in them and stay long. However, we are at a juncture where a lot of push is happening in Japan, where there is possibility of naming and shaming if the companies do not do the right things. So collectively, thousands of companies are going in the right direction to improve the return on equity. And to do that, they have to do certain things in a right manner, collectively. I've not seen this kind of movement in 2 decades. And this is genuinely for the first time. So there would be some tourist investors which will come. Japan does very well once every 3, 4, 5 years. That's always the case. But this is something more, something deeper. And what you're saying about the breadth of the market, which is very narrow in US, the breadth of the market in Japan is extremely wide. This is something really important that's happening in Japan. And I'm not sure if it's being encapsulated in the right manner, except for highlighting that, yes, it's creating new highs in the indices.
But you're making it sound like this is a real, more profound turning point, and that if what you're saying is the case, then that would mean that those highs could perhaps be extended in the broad market there.
See, this is again a 30-year-old index high that we reached. That's not important. Across the board, I mean, I do believe over the next 1 to 2 years, we'll see new and new highs. The amount of money that's coming into Japan, the amount of interest that is coming into Japan is something that I've not seen for a long time. And this time for real, it's for genuine reason. If the company's return on equity goes up, if the companies are willing to divest non-core assets, generate cash. Look, I cover a company which, it's an investment. Sony is my top pick. Even that company, while it's winning in multiple places, they recently announced they will be exiting Sony Financial Holdings. That's a non-core insurance business. They are spinning that off. So a company that's done very well, if over the last, let's say, 6, 7, 8 years, the stock is up about 7 times. It's done very well for shareholders. Its ROE is above 15% consistently. And yet they are doing the right thing. So it's not just 1 or 2 companies or 10 companies that are under pressure. Collectively, Japan Inc. is doing a phenomenal job. And again, not enough investors are paying attention. They're only looking at the index. There is a very widespread movement that is happening. And this is something quite remarkable. I've never seen something as important because in Japan, the carrot doesn't work that well. And this stick of naming and shaming and downgrading some of the companies from the prime section to the standard section is actually working.
Atul Goyal, who is the Jefferies Managing Director. Really great insights and analysis there. Appreciate the conversation this morning. Thanks.
Thank you, Brad. Thank you.